Hey, what is happening, Bulls and Bears? I hope every one of you is doing fantastic. It's Friday. Our short, just start off with this. We've got a lot of financial economic news to get caught up on. But my put option on NVIDIA is doing pretty well. We've got another down day. So, just for the few of you that are, I don't want to say following me because I always tell people don't follow somebody. Just, consider, uh, trading this thing. I mean, look at this. Let me just bring this up here. This thing's parabolic, and we shorted it just under 140. You can't really see it on the long-term chart here because it's such a just 2 day time frame that we're looking at. But let me zoom in here to a 5 day chart. You can see right when we shorted it here, just under 140. We're doing really well. We're down another. Let's see here. Since we shorted it, we're down about over almost 7%, because it's another 3.5% today, 3.2%. So we're doing pretty well on that. And I know a lot of you here don't trade, so no big deal. A lot of people just come here for the news, which is awesome. Staying ahead of the news is definitely an important part of uh, what we do here and what I do. I mean, I want to see what's unfolding here, what's happening, what's coming down, right? So let's talk about this. We have this article out here, and this is out of the Wall Street Journal. The U.S. debt. Debt will sink the American empire. Will debt sink the American empire? Well, it depends on what you call the American empire. If you're talking about the people, most people anyway, people have already sunk. I mean, people are in really, really bad shape financially for the most part, but you wouldn't think so. A lot of people don't even consider themselves in bad shape, even the ones that are living paycheck to paycheck. And it's pretty interesting because people have accepted that as the new normal, just not having any money. That's just the way it is, right? But if you're old enough to know better, like me, I remember back in the 90s, um, my parents had their house paid off. And, this is not the normal nowadays. Now, you have only 60% of the people, roughly, was it 64% of the people that actually are considered homeowners? But I have to put quotations at, because even homeowners are not really homeowners, because of that 60 something percent, only 1/4 of them actually have their home paid off free and clear, which puts the home ownership rate, the real home ownership rate, down around 15%, right? So 1 in 6 people roughly own their homes free and clear, meaning they don't have a mortgage paid off, right? But it gets even worse, because of those people, many of them, well, I shouldn't say many of them, all of them have some sort of ongoing, never-ending payment, and that's called property tax. Right. So most of you know that, but it's a big scam in my opinion. So I like to point that out here. Well, let's get into some data here that I found, and I've got some notes here. I just wanted to lay this out here. The 17 signs of American financial collapse. Right. Some of these might be pretty shocking to you. According to a new survey, 76% of all Americans are living paycheck to paycheck. That's up. Remember, we first started talking about that maybe sometime around 2020. It was like 60 something, between 60 and 70%. Now it's 76%. So it got even worse. Just like we said here, things are going to get worse. When we look at this next year, it's probably going to be 80%, maybe 85%. We'll have to revisit that here as far as the paycheck to paycheck crowd. Of all the trillions of dollars that were pumped into the economy, the stimulus checks, record amounts of money printing, why are people getting further and further into debt, and why are more and more people living paycheck to paycheck, right? So the people that think that printing money is the solution, when are they going to realize that it's not the solution? Number two, 27% of all Americans do not have even a single penny saved up. That's pretty sad. 46% of all Americans do not have $800 saved up, or they have $800 or less saved up. That's almost half. Less than 1 out of every 4 Americans has enough money stored away to cover 6 months living expenses. Wow. I think I may have 6 months living expenses saved up. Pretty expensive here in California. I'd have to check that. I know it's pretty close to that. Wages continue to fall even as the cost of living continues to go up. Today, the average income for the bottom 90% of all income earners is just $31,240. An increasing percent of Americans' families are just trying to find a way to survive month to month. That goes with living paycheck to paycheck. And there's 17 of these, so this is going to take a little while. Number 6, the percent 62% of American middle class say they have had to reduce their household spending over the past year. What was it? A few months ago, we talked about how many people actually dropped cable, Comcast cable. We'll have to get an update on that and see where Comcast is at, because during the first quarter of the year, they had lost like a 500,000 subscribers. I didn't see the second quarter numbers, but we'll revisit that in a future video here. Number 7, small business is becoming an endangered species in America. In fact, only about 7% of all non-farm workers in the U.S. are self-employed at this point. That means that the vast majority of Americans depend on someone else to provide them with an income. That's going to get even worse here as time goes on here. Number 8, in 1989, the debt-to-income ratio for the American family, the average American family, was about 58%. Today, it's 154%. Folks, this whole economic illusion, or this illusion of a growing economy, is based on debt, right? Most of you know that. Today, a higher percentage of Americans are dependent on the government more than ever before. According to the U.S. Census Bureau, about 50% of all Americans that live in a home gets direct monetary benefits from the government. So what's going to happen when the government handout gravy train comes to an end? Will it ever come to an end? Back in the 1970s, about 1 in every 50 Americans was on food assistance. Today, 1 out of every 6 Americans. Wow, 1 out of every 6.5 Americans. So it went from 1 in every 50 in the 1970s to 1 in 6. Wow. Number 11, it's estimated that less than 10% of the U.S. population owns any gold or silver for investment purposes, right? A lot of people think it's a barbarous, and I say the word here, barbarous relic. Isn't that what Ben Bernanke, former Fed chairman, used to call it, a barbarous relic? People have gotten away from real money, but that's good, because those of us that have real money, those of us that are stacking, are going to be very heavily rewarded in the coming years, maybe even sooner, but could still be a few years away. There's a chance we could see some sparks fly off as far as the monetary system in the next 12 months. It wouldn't surprise me at all. It has been estimated that there's approximately 3 million preppers in the United States. That's not much. Number 13, 44% of all Americans do not have first aid kits. I don't know if that's really an economic sign. It just means that people don't want to prepare, and most first aid kits go unused. The percentage of Americans, 48% of all Americans do not have any emergency supplies saved up. That's about half. 53% of all Americans do not have a 3-day supply of non-perishable food. Okay, so it starts getting into the prepping side of things. That was put out by who put that out? There it is. That was put out by Prepper 1 Cents Ultimate. And when you say people are living paycheck to paycheck, it usually takes a couple missed paychecks for people to really get behind. But remember, back in 2020, during the shutdown period, we even had government employees begging on GoFundMe for money and things like that. Well, let's shift topics a little bit here. The U.S., we are putting Japan on a currency manipulation watch list. Now, I think this is funny, because the U.S., we're probably the worst country when it comes to manipulating currency. Now, we don't really manipulate for trade purposes, but you could say that creating trillions of dollars at the click of a mouse is a form of manipulation. And it's interesting that a lot of these countries that actually manufacture a lot of goods and products still accept our dollars, right? But of course, we're seeing countries go away from this now with the whole BRICS nations movement. And you're going to see a lot of eye-opening news about the BRICS nations, right? So stay tuned for that, because there's a lot more than meets the eye with the BRICS nations, right? Well, let's get into this here. There's a high-rise building going up in LA, and it's going to be for the unhoused. A new high-rise building will house LA's homeless, and these units are basically $600,000 units. The grand opening of the Weingart Tower will have 278 units to shelter the homeless. Here's a photo here. Pretty nice. We got the workout gym. There's the high rise right there. We got some nice stairs. The walls are painted all nice and white. Everything's new. Everything's modern. What's it going to look like? I think within 30 days of the homeless people living there, it's going to be, I think it's going to be a disaster. Is this a good idea? 278 units that are $600,000 each for the unhoused. And that's not very many units. When you look at the tens of thousands of unhoused people, 278 units, it seems like they would have made something cheaper, like maybe start off with some sheds, maybe some Home Depot sheds. It's better than being on the street, but it's not going to cost $600,000 each. To me, this is a terrible, terrible budgeting move by the city of LA. I mean, what do you think about this? The building will have an entire floor of offices for caseworkers, in addition to a list of impressive amenities: a gym, art room, music room, computer room, and library. There's 278 units in the 19-story development as known as Weingart Tower. It's intended to help people currently without shelter on Skid Row and will be LA's largest permanent support housing project. All right, so how's that going to turn out? Please let me know what you think about that down in the comments. Olive Garden raising their prices once again. CFO reported on company earnings call that Olive Garden menu prices for this year will be increased to more stay in line with inflation, and they're going to increase the menu prices by 2.5 to 3% over the next 4 quarters. So another restaurant raising prices. Something tells me that in California they'll raise them even more than that. All right, let's talk about what's happening down in Arkansas. Arkansas. Job openings dipped 10% in April. Layoffs are up 16.6% in April. So something's not doing too good down there in Arkansas. Not too many jobs up in the Ozarks. Actually, I'm not making fun of Arkansas. I've got a lot of relatives in Arkansas. I think Arkansas is really cool. I actually visited Arkansas several times. We have relatives there. So back when I lived in Michigan, we used to go down there in the winter. And I was amazed back then that we could just drive a few hours and get out of the snow, and the weather down there was beautiful. All right, next up here, U.S. home prices hit another all-time high. Folks, we're the only channel here on YouTube that told you this was going to happen. If you've been on this channel, you know all the shenanigans that are happening right now. You know all the things they're doing to keep home prices propped up. The question is, how long will this last? How long will this last? Can they keep home prices propped up forever? U.S. home prices hit record high once again, according to the National Association of Realtors. The median price of a previously owned home is now a bit above $419,000. That's the highest price on record. Overall, we're up 5.8% year over year. Of course, there's some markets that are starting to come down, mostly in Texas and in Florida. So, folks, this is getting pretty scary. I mean, a lot of people out there are predicting some sort of crash or correction. But I think the inflationary side of things, the prices continuing to go up and not coming down, is going to be even more dangerous. There's so many things that could be done to change this, to fix this, to make or to cause the cost of living to come down. But nobody's talking about doing those things. In fact, if you look at the leaders out here, the people that are running our financial system, people like this, Janet Yellen. Listen to what she said. The interest burden of the debt is at what I would call normal historic levels. Folks, this is scary. We have people out there in very high level positions. Treasury Secretary Janet Yellen is saying nonsense like this. Normal historic levels. How could she say that when the debt's going up by $1 trillion plus every 100 days? And I just read a report that it went up another 2.1 trillion just in the past, just a little bit more than 100 days, every 4 months. 2.1 trillion. I'd have to check that, but that's what I read. How can she say this is normal or historic? This is completely abnormal, and it's not historic. If you look back at history, things used to be a lot more affordable. We didn't create this amount of money, and it's just going to keep going, right? The central banks are not going to make it easier for most people. If you're investing, though, and if you're looking for opportunities, then you could stay ahead of the curve, right? That's what we do here on this channel. You know what's going on. If you like to invest, even if you don't invest, just knowing this should help you get ready for what's coming because I'll say it again, it's going to get a lot worse, everybody. All right. But we're going to make it. We're going to be okay. Everything's going to be fine. No fear whatsoever because we know what's happening, right? Everybody, thanks for watching. Please make sure you are subscribed, and we'll see you again here very soon. Maybe this weekend we'll be back with another report. Until then, keep stacking peace.